Now, you've identified three ways how people can buy properties below market value. In other words, save thousands on their property purchases. And the first one that you've identified is buying properties, buying distressed properties. Talk to us about that.
A distressed property is a property that is normally an urgent sale, which means that the seller doesn't want to allow the property to be listed for an endless amount of time. Okay, so there's different levels of urgency, which I'm sure we will discuss a little bit later, but generally it implies that the seller wants to get rid of the property as quickly as possible.
And with the seller wanting to get rid of the property ASAP, he would be likely to let go the property for much less than what he can get.
Absolutely.
So what are some of the reasons why people would want to sell a property urgently?
Okay, so one of the reasons, which is a less urgent reason, is when the properties are run down, especially in older areas where people feel they just want to move on to a more modern suburb. And they do realize that those properties are not, it needs some work, so, they're going to have to let it go at a lower price. Then we move towards the more urgent sales, which is typically when properties are about to be foreclosed on, meaning that the owner has now fallen behind on rates and taxes or levies, or his bond repayments, and now there's foreclosure coming. So he wants to
so financial reasons.
Yes, so he wants to get rid of the property as soon as possible before foreclosure, so that he can still get as much out of it as possible.
Okay.
Then there's a couple of other reasons. For example, people breaking up.
Divorces.
They are in a tight spot. People don't want to talk too much, so they want to just get rid of the asset as soon as possible in order to move on with their lives. If someone falls away, for example, inheritees do not want to necessarily manage a property going forward. They just want to get the value of the asset out of it as quick as possible.
Now, where do we find these distressed properties?
Okay. It's hard work. I think we understand that property investment is hard work as a rule, and there's a Robert Kiyosaki principle that says we need to follow the 110-1 rule. So
the 110-1
rule, yes.
Okay.
So we need to sift through 100 properties in order to find 10 that we need to properly analyze based on the formula that we discussed earlier. And then out of those 10, you only need to choose one property. And with distressed properties, it's unfortunately the same. So there are online platforms that you can go through, for example, My Roof, Property 24, Private Property, but you're just one of thousands of property investors that's going to snap up those properties as quickly as they can. So what a lot of people do is they walk the streets and find access to blocks. I know a lot of agents that do this. They actually, kind of read people's posts in vacant properties, and they see is the rates and taxes behind. That's normally a good indication. You can go and find the title deed. You can determine who's the owner of the property and try and make an offer. But I think most importantly, and I think this is a golden rule. This is one of the golden nuggets for being a property investor. Is you need to build a proper team around you, and finding a group of estate agents that will find you these distressed properties. That is probably the easiest and the shortest way to get there.
Now, Hannes, the second way that you've identified how people can buy properties below market value is directly from a developer. Talk to us about that. Okay,
so normally developments, it normally starts off in an area that is upcoming. Okay, and just a sideline rule is that it's normally it makes a lot of sense to buy in the first phase of a development, because normally then developers are they're relatively negotiable around pricing, because they have targets to meet selling targets to meet to the bank in order to prove that the development is going to take off in order to unleash the second and third and fourth payment.
And this first phase, is this normally off plan?
An off plan, that's right. Yeah, so there's nothing there. It's just a plot in pictures. For sure. Then so we need to do quite extensive homework still. I think, again, based on the same parameters, I mean, you need to believe that the area that you are buying into is a good investment. And upcoming developing areas where we know that there's malls coming up and schools coming up, new areas, those are great areas. There's also, in a lot of instances like this, there's been pre-approved finance made available by the bank, so it makes the bond application process a lot easier. Yeah, so I think that's it on developments. It's
Let's move on to the third way how people can buy properties below market value, and you've identified auctions. Talk to us about that.
Right, yes.
How do you avoid not letting your emotions take over and you actually buy a property for more than the market value?
Absolutely. There's, again, the research and the homework before you go and attend an auction. So let's just discuss what is an auction. An auction is where those foreclosed properties are now being sold by the sheriff. So people have the option to bid on those properties, and the highest bidder will take it. But there's a lot of things to look out for. Number one is, like you very correctly said, your emotions can take control of you, because it's kind of a vibey thing. It feels like going, to the casino, and but having the factual information at hand, and things that you need to look at before going into this is, for example, the specific terms and conditions. Before, who's paying the rates and taxes and levies, what is the specific requirements and deposits, so that you don't bid on a property and then you can't deliver, because there's a lot of default penalties in that regard.
Now, you've mentioned these three ways of how people can buy properties below market value. They sound great in theory, but as you also mentioned, going out and finding these deals is not always that easy. But Hannes, you are the MD of Share Your Wealth, and one of your offerings is where you go out and you find these below market values properties for people. Talk to us about this offering.
Yes, it's actually our 10th anniversary this year, and over the last 10 years we've really built up a solid infrastructure of sourcing agents and service providers, which brings these offers to us all the time, and we've just decided to make that available to our clients as well. So continuously we have offers coming up, developments and single units that are have bank repos, etc., that we make available to our client base.
Well, Hannes, thank you so much for your time. Always lovely chatting to you.
Thank you, Cornelius.